The historic Australian agribusiness Elders has resumed paying dividends for the first time in almost a decade, after recording a 40% rise in underlying profit after tax to $57.7 million for the year ended September 30. The company also signaled a strong intention to grow, with plans for new branches and a stronger presence in the high-earning agriculture fields of horticulture and viticulture. Investors welcomed the result, with shares in Elders soaring 7.9% to close at $5.60, the 178-year-old company's highest closing price for the year. The stock hit an intraday high of $5.77. It is pleasing that we have been able to declare a final and special dividend, which are Elders' first shareholder dividends since 2008, Elders Chief Executive Mark Allison said. Elders will pay a fully franked final dividend of 7.5 cents per share, as well as a fully franked special dividend of 7.5 cents per share. The company's statutory net profit after tax of $116 million, which included a $15.2 million tax asset adjustment, was more than double last year's result. We've delivered the promise from 3 years ago. We're paying dividends, for the first time in 9 years, and we're now a strong platform, as in agribusiness, for growth through to 2020, Mr. Allison said. Our market cap at the beginning of this journey was $50 million, and the share price at the time of starting this was around $1.50. So our desire was to get back to investor grade. That included removing the hybrids from our capital structure. The hybrids had a preferential payout requirement, so we could pay dividends while we had the hybrid structure, he said. The company also signaled a willingness to grow, highlighting plans to establish 20 new Elders branches across the country by 2020, to be delivered via organic growth and acquisition. Key agricultural states such as Victoria and New South Wales are set to benefit from the bigger footprint, with the company citing gaps in the market in places such as the Western Districts in Victoria and Central New South Wales. That target of 20 new branches between now and 2020 I think will be a minimum target, because there are a number of agricultural areas in Australia, key agricultural areas, where we're not represented. So I think that we'll just continue to drive that growth, he said. In its results presentation, the company also identified many other growth opportunities to help the company deliver the next wave of growth, including increased market share in high-value cropping regions, bigger presence in irrigated farming, viticulture and horticulture, and growth in insurance gross written premiums. Other highlights from Elders' 2017 result included underlying earnings before interest and tax, EBIT, of $70.4 million, operating cash flow of $81.6 million and underlying return on capital of 26.8%. Agribusiness across Australia is in a very positive place, Mr. Allison said. Morgans analyst Belinda Moore said Elders had delivered a very strong fiscal 2017 result, which exceeded expectations in a research note assessing Elders' 2017 results. A strong summer cropping season and a positive start to the winter cropping season supported strong earnings growth from Elders' Australian network, EBIT plus 25%.